Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin. Happy New Year's. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, it's been a fairly exciting year for Bitcoin. It started off the year, if we go look at the 12-month candles, it started off the year at around $42,000. And at least as of right now, it's at 93,000. We are coming up on the yearly close in just a little bit. As I'm making this video, you can see the yearly close is just about 55 minutes away. So all in all, this has been a pretty good year for Bitcoin. It's up about 120%. Last year, Bitcoin went up 155%. So two fairly strong years here for Bitcoin back to back. If you check out the year-to-date ROI for Bitcoin and you look at year-to-date ROI in 2024 compared to 2023, it does seem like 2023 was a fairly good blueprint for what would happen in 2024. Obviously, there's some divergences here and there, but for the most part, 2023 and 2024 look fairly similar. Again, also you could compare 2024 to other prior halving years like 2020 and see some similarities as well, 2016 and 2012. In terms of what kind of happened going into the end of the year, there are a lot of similarities between 2024 and 2012 in the sense that there was sort of a rally early on in like November, October, November, but then it kind of stalled out as December arrived. Furthermore, if you look at 2024 compared to 2016, you'll see that the year-to-date ROI ended up being about the same. It's just that in 2024, it achieved it about a month earlier, about half a month before it hit that level in 2016. If you go check out where Bitcoin is with respect to its bull market support band, the 20-week estimate, the 21 KMA, it's currently, again, the price of Bitcoin is right around 93K. The extension from the 20-week estimate is still pretty high because the bull market support band is all the way down at 77 to 81K. So still well above the bull market support band levels. In fact, if you look at this year compared to last year at this time, it was also about the same distance above the bull market support band. And you can actually visualize that even better by just looking at something that we call the short-term bubble risk, the extension from the 20-week moving average, and then just seeing that, this is basically the same levels that Bitcoin hit last year around this time in terms of extension from the 20-week moving average. And then it slowly went back down until it was only about 14% above the bull market support band. Right now, it's still about 20 to 21%. But remember, the 20-week estimate will continue to go higher as long as the price remains, up here. Okay. So obviously, when you get into a new year, things can change, right? A lot of times as you go into New Year's, market conditions can change. We've often seen things like Bitcoin dominance go down in post-halving years. That doesn't always mean it has to happen immediately, but it is something to at least be on your radar. For instance, right now, Bitcoin dominance is at 58%. And if you were to look at 12-month candles of Bitcoin dominance, you will see, in fact, that it tends to spend 3 years going up and then one major year going down, right? So 2017, it dropped. 2021, it dropped. But those 3 years in between, you can see Bitcoin dominance went up. Back in 2021, when we sort of began our Bitcoin dominance journey, we said that it would likely go up for the next 3 years, and it has. And now the question is, how long until you see a drop like this? Okay. Now, it could be at any point in 2025. If you look at, at alt Bitcoin pairs, one of the things you'll notice is that even as late as Q4 of 2017, alt Bitcoin pairs were actually at 0.25 then, even though it was the post-halving year. So just be aware if you're studying the alt Bitcoin pair chart a lot and wanting to see something repeat, it's always certainly possible that it occurs early on like it did at the beginning of 2021. You can see that alt Bitcoin pairs got a really strong rally in early 2021, but there's also a non-negligible chance that it takes a little bit longer to see that same type of rally because that same type of rally back in 2017 didn't really get going until November. And again, when you're trying to figure out, how is Bitcoin going to do with respect to the other cryptocurrencies, monetary policy plays a big role. Um, and if you look at alt Bitcoin pairs overlaid by total assets held by the Federal Reserve, one of the things you'll notice is that last cycle we saw we saw alt Bitcoin pairs bottom out when QE started. That still hasn't happened yet, which is kind of interesting. The counterpoint, of course, is that the cycle before they got a big rally, even though quantitative tightening wasn't, or even though QE wasn't really going on, but you can see that the balance sheet of the Fed was flat during that time. So I would even go as far to say that you might get this rally by Bitcoin pairs, um, even if the Fed were to end QT but not start QE. But again, that is not something that we have seen yet. Now, right now, all Bitcoin pairs are trying to hold support at the bull market support band. But one of the things you'll also notice is that Bitcoin dominance is trying to do the same, right? Bitcoin dominance is also trying to hold support at its own bull market support band. So certainly a lot of interesting things right now in the market. In fact, if you were to go look at the dollar, and we talked a lot about this back in September, we said that when the Fed starts to cut, we will likely see two things happen in relation to sort of the forex markets and long into the yield curve, right? We'll see the dollar go up just like it did in 2016. So if you look here, the dollar went up in 2016 into the end of the year, and then it topped out in the early part of January. Okay, so we were sort of just saying, all right, well, what if the same thing happens, right? What if the dollar sort of rallies into the end of the year like that, just like it did in 2016? And it seems like that is in fact what has been happening and what will likely continue to happen. I don't know exactly how high the dollar is going to go, but 109 to 110 was always sort of like at least a preliminary target. It could shoot higher than that, but that was at least where I was initially thinking, sort of coming back up to where this wick was right there. But again, I mean, it's possible. I mean, it's certainly possible for it to take out the prior high. But again, at that point, it's not as much of a strong conviction trade. It's just saying, all right, we got on the right side of the move. Who knows how far it'll go? But the reason we said this, because the dollar has been very highly correlated with the long end of the yield curve. So if you're wondering why Bitcoin has been, frankly, stuck in traffic on Struggle Street for the last 2 to 3 weeks of 2024, I think a lot of it has to do with it just being, it behaving like a risk asset, because we've seen the S&P doing the same exact thing, right? If you look at the S&P 500, it's also been struggling a little bit at the end of 2024. And my contention as to what is going on is that the long end of the yield curve, sort of the rise of the long end of the yield curve, so that's the difference between the spread between the 10-year and the 3-month. My suggestion is that we're seeing the same thing that happened back in 2023, right? Where you also saw a breakout by the 10-year yield here, and then when it back tested the 21-week EMA and then went up, risk assets went down. In fact, if you overlay the S&P 500 onto that chart, you'll see what I'm talking about, right? You'll see as the 10-year yield held support at the 21-week EMA, that was when the S&P got that correction right there. And if you overlay Bitcoin onto that chart, you'll see the same thing, right? You'll see that Bitcoin was also struggling during that time. And kind of, I feel like the same thing's kind of happening right now, right? Where you're getting this bounce off the 10-year yield, and now yields are going up. And then the question is, well, how long will they go up for? Back then, after the 10-year yield bounced off of its 21-week EMA, the 10-year yield then topped about 3 months later. Okay, so we've already seen it go on for about a month already. It's been about 4 weeks or so far. Hard to say if it's going to go the exact amount of time, but I will say, if you look at if you look at bonds, if you look at like TLT or something, which is behaves sort of the opposite of this, then what you'll notice is that it tends to double bottom or sweep the prior low. So like if the long yield curve is going up, TLT is going down. And so a lot of times when TLT gets these moves, it'll form these sort of these double bottoms, or where it'll slightly go below the prior low before then bouncing. And so you could argue that that is what's happening right now. And furthermore, one of the things to consider is that the bond market is sort of doing what the Fed is unwilling to do. This could be the bond market's way of saying the Fed has in fact cut too soon. Um, there is a chance that that is the way that this should be interpreted, because normally when the Fed starts cutting, you can see bounces in the long of the yield curve, but they tend to be relatively short lived. Now, fortunately, we were on the right side of this because we didn't, if you follow this channel, what we were saying was that as long as initial claims, are below 300K, then it's not really recessionary. Therefore, if the Fed starts getting too aggressive with their cutting, the long and yield curve might have to go up, because then the market's starting to price in, inflation again and reacceleration of that and growth rather than a slowdown. So I think one way to interpret what's happening right now in the markets is that the bond market is essentially saying that it's possible the Fed has cut too soon, and therefore the long end yield curve has to do what the Fed was unwilling to. Um, and I think that's probably the best interpretation. I could be wrong. Absolutely, I could be wrong. But that's what I think is happening right now with Bitcoin. If you've been wondering, like, why has it been struggling here going into the end of the year, it might just very well be that the long end of the yield curve has just been going up, and it's been a drag on risk assets. And it's not just Bitcoin, right? It's all risk assets. You see the Nasdaq dropping. We've seen the S&P dropping. It's all very similar. In fact, I mean, if you look at a correlation, if you look at a correlation coefficients of Bitcoin, right? If you look at it, sorry if I can get this to load. I don't know. It seems like it's not loading right this second. But if you look at it for crypto and stocks, at least, maybe we're having issues with some of the metals right now. But if we look at it for crypto and stocks, and we can get this to load, you'll see that Bitcoin tends to be fairly highly correlated to a lot of the stocks, right? I mean, you can see that it's mostly green. 0.91 correlation with Netflix over the last 60 days. Over the last 180 days, you can see that Bitcoin has a 0.83 correlation with the S&P 500. It has a 0.93 correlation with Tesla. If you look over the last 365 days, Bitcoin is correlated 0.77 with the S&P 500. So that kind of explains, I think, the current move by Bitcoin. If you look at its risk level right now, Bitcoin's risk is 0.576. So if you were to isolate just the 0.5 to 0.6 risk bands, that's what it looks like. If we were to go check in on some of the other sort of fluffier metrics like the RSI, and we make it so that it's a little bit easier to observe, you'll notice, right, and we'll go to the 2-week RSI. One of the things you'll notice here is that so the 2-week RSI shows sort of diminishing peaks each cycle, and it also shows sort of lower lows each cycle. And we already tagged it once back in February, in March, but we said back then that was not likely indicative of a market cycle top, even though the 2-week RSI was up here. We also saw that in 2013, we had a double peak on the 2-week RSI. And furthermore, this also, frankly, reminded us of what happened last cycle, right? Where you had, a very similar thing happen where, you basically had Bitcoin kind of getting ahead of itself and then having to just bleed for 6 to 9 months. And that's basically the exact same thing that happened here. And then eventually it finally broke out, and then we got our landing here. It's broken out. Now, we have not got a landing, right? We have not. And I would argue that if we do, there's a higher chance that it would actually hold this line as support than last time, because one of the reasons last time it failed to hold it was likely due to the fact that the unemployment rate just went from 3.5% basically all the way up to 14 to 15% essentially overnight. Um, so I think there's a decent chance it would hold it as support if it were to get a correction back down there. But even if it were to go back down, it would also have some potential support here at the bull market support band, right? If you look at this on sort of a daily time frame, right, you can kind of see that this is where Bitcoin first got up into this range, and it was sort of wicked down, was around 85K or so. And again, right now, the 21-week EMA is already above 80K. Furthermore, one of the things we've noticed by Bitcoin in post-halving years is that at least in the last two, there has been a correction in January. Now, what's interesting is this time we've already kind of had a correction in December. But if you look at what happened in 2021, there was a correction in January, about a 30% drop. If you look at 2017, the post-halving year in January, there was also about a 30% drop. But the counterpoint, of course, is that Bitcoin was not really struggling at the end of December. It was actually going up. And then you had a drop in January. Same thing again in 2021. This time has been a little bit different in that regard, as it's bled in December rather than having gone up. So obviously the optimist would say, well, maybe it's just front running the correction because everyone's talking about it happening in January. Therefore, why not it happen in December? If you look at a price range here, it's already dropped around 15%. A 30% drop would actually put it right around the 20-week moving average. But I think that, so the optimist would certainly look at that and say, well, why? Maybe it's just front running what everyone was already knowing was happening. So by the time it actually happens, Bitcoin already carried out that move. The other way to think about it is, if there's something inhibiting Bitcoin from going higher, and again, it could just simply be due to the big rise in the yields over the last couple of weeks, right? We didn't see moves exactly as strong as this in prior Decembers of halving years by the 10-year yield, right? If you were to overlay the 10-year yield onto this chart, the 10-year yield has never really been this high at this point in Bitcoin's history. And so that could be the reason. And then finally, I guess the last thing to think about is there has been an uninversion of the 10-year and the 3-month, right? There has been that uninversion. And so I imagine there's at least some uncertainty associated with that as to whether you get sort of the recession that normally follows. But again, even if we get one, they're not always the same. Sometimes they're just sort of very brief, like 1980s. You had sort of a very brief one, and then you had another one a year later. All sorts of things can happen with that stuff. But again, as far as that stuff's not really a tradable thing. I think what I would do is, again, track things like initial claims, and if they ever print 300K, it probably means there's some more to the labor market weakness than there has been. But for up until this point, there hasn't really been that weakness, and so you could argue that the reason that risk assets are struggling is not because of weakness in, say, initial claims or anything like that, but just because the long end yield curve's going up, doing the work that the Fed was unwilling to do. So that's essentially where I think we are going into 2025. So I would like to say Happy New Year's to Bitcoin and to all of you guys, and I look forward to being here in 2025 to try to decipher the markets. As always, I will probably get a lot of things wrong, but I'll do the best I can to at least outline the different scenarios that make sense to follow. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.